University of Missouri Extension economist Ron Plain is our marketing analyst this week. The most recent porcine epidemic diarrhea virus numbers from the American Association of Swine Veterinarians shows there have been about 4,000 positive tests for PEDv in the United States. The confirmed cases have risen since the start of 2014, with February featuring the 4 highest totals. It's obviously been a major issue for hog producers, and significant losses could impact feed demand. Take soybean meal, for example. Animals consume nearly 98% of U.S. soybean meal, a product that has helped fuel the overall soybean market recently. While there isn't an accurate count on PEDv death losses, perhaps the recent rise in lean hog futures shows the market believes it could be a large number. The April lean hog futures contract added $7.50 last week, and when we talked with Ron Tuesday afternoon, it had put on even more.
It's amazing, Jeff. We've been at record prices for some time, and we're going up fast. Up the $3 limit today on the April, May, June, July, and August contracts, each one of them well into record territory, and no signs that we're going to stop this anytime soon.
Last week it put on $7.50 on that April contract. What do you attribute it to, Ron?
Well, there's 3 big obvious things. First of all, a concern over the PED virus. Expectation is that slaughter is going to be down sharply spring and summer, and will give us high hog prices also as a result. The fact that we got beef at record levels. Competing meats are high, and so that's going to help out grocery store pork prices. The other thing is looks like Russia is going to be back in the market. They've been out for a little over a year, and I expect them back buying U.S. pork here later this month, and so strong export demand's the third factor.
The international disagreement there between the U.S. and Russia over Ukraine wouldn't play a role in that, Ron?
Well, it might, but what Russia's doing is stopping their purchases from the European Union. That's where they've been getting a lot of their pork for the last 12, 14 months. They haven't been buying from us. And the Russians are equally upset, I think, if not more so, with the European Union over the Ukraine situation. Plus, the other thing is that the European Union has had a few cases of African swine fever, so it leaves Russia in not a real good situation. They need to bring in pork from somewhere to have enough meat for their consumers.
Tell me what sow slaughter numbers have been like. Keeping it back would lead to maybe thoughts of expansion.
Yes, Jeff, we've been killing sows at a slower pace. Our gilt slaughter data also indicates we're expanding the breeding herd, and we expect that to continue. Profit outlook is very bright, and with the PED virus reducing pigs per litter, so yes, we think the sow herd is growing at this point in time.
On the flip side, for feeders, corn is starting to rise a little bit, and soybeans have risen a lot, and that's been fueled a little bit by soybean meal. Talk about what that's doing to margins.
Yes, we've seen some rally in corn prices, still far below year-ago levels. Interestingly, even though soybeans are down, soybean meal has been steadily higher than a year ago during this winter season. We're squeezing margins a bit on the cost side. We're not getting quite as cheap break-evens, but we're looking at live break-even hog prices around $62, $63 a hundredweight. That gives us a break-even on a carcass basis somewhere around $83 a hundredweight.
You know, we talked before we went on about if you were using that futures market, and if you did it before this run, it probably wasn't a good thing, but is there anybody that's willing to play now and think that maybe this is a high?
Well, you know, a lot of the traders like to go with the trend, and the trend has been steadily higher. Anyone who said, gosh, record hog prices are good enough and sold a future contract would have faced some sizable margins if that was very long ago. We're going to top out at some point, but right now all indications are we're going to move higher first.
How much higher can it realistically go, Ron? Do you think we can put another few dollars on this market?
I think so. If you're up $3 limit on a bunch of contracts today, we're probably going to be higher tomorrow. There's some talk we may see futures reach 120 before they start to slide back down. It's we're in uncharted territory, so it's difficult to speak with a great deal of confidence.
Understood. You wrote some interesting things about U.S. pork demand in your recent write-up, your weekly write-up. Tell me about the state of U.S. pork demand.
Well, we were up a bit in meat demand, pork demand included last year. That's a good sign. Over the last 15 years, though, pork demand, domestically at least, is a little bit softer than it was 15 years ago. The big thing on the pork side of things is exports. A huge increase in export demand for U.S. Pork. That's really what's allowed the industry to continue to grow. Our expectations is that we're going to continue to see strong performance there. Domestically, a lot of that just simply depends on the economy. If more people could get jobs and generate more income, we'd see stronger meat demand.
One of your notes was that overall meat demand here in the U.S. In 2013 was up 3%. It's the highest level since 2007, which would have been before the recession. My question would be, what are pork prices doing relative to what beef and chicken prices are doing, if that would continue?
Well, last fall, all four meats were record highs in grocery stores. Our expectation is that with the PEDv virus tightening supplies, we're likely to see a bigger run-up in pork prices, certainly than poultry prices. Expectation is more chicken on the market as we move through 2014, and a little bit softer broiler prices and fairly steady turkey prices. Beef, on the other hand, seasonally, we should start to see some price decline in beef prices in grocery stores once we start to get to summer.